What's going on, everybody? Today we're going to talk about how to handle net assets, net position in a higher education accounting scenario. If you have trouble getting this done at your institution, be sure to reach out. It's what I do for a living. Be happy to help. This is made into a problem that's way bigger than it needs to be, and today I'm going to show you how to get this sorted out. So let's get after it. This is our opening journal entry to create some financial movement. Basically, it's in the July month of 2025, and you'll see I have 5 different balancing segments with 2 of them in the same fund type, as you'll see. I've got expenses that are accrued, and then I put in some revenue and some cash so that we have some nice financial movement to do a close. So let's load that up to Oracle. I'll send it over and then we'll go review it. So they're all up there. Now let's go find the journal, and there it is, unposted. And you'll see basically it has come over, and these are all the entries so that we have a good cross balancing segment suite of transactions to take a look at. Next up, we'll go up and post it, and we'll search for it and make sure it gets posted, and it is. So next up, let's just go quickly over and look at the accounts, and we'll see that we have transactional data there available for us as it is. Now we're going to make our way over to the calculation manager, and I'm going to set the filter for Harper, and we'll have everything open. I'm just going to expand all this out so that we can take a look at it momentarily. All right, let's talk about amount/account character. Now, this is something very interesting because a lot of accountants have no idea about the concept of character, and that includes CPAs. Well, it happens to be one of the most important aspects of accounting, and that is, what is the character of an amount or an account? And when you're talking about, for example, payroll, it should have payroll. And so this comes into play a lot when we're talking about how we classify in Oracle retained earnings when we're looking at it in the context of higher education, whether it's net assets or net position. So for this discussion, this is one of the most important aspects of what we're talking about today and what we're trying to solve. Take a minute, review the definition, and understand that this is very intuitive, but most people don't really know what it's called. Let's talk about fund type. Now, this is by no means the full exhaustive list of fund types that are out there, but it's a pretty good suite. Now, each of these funds has a particular character and therefore needs to be classified based on the rules in GASB for public respect to net position and FASB for private universities with respect to net assets. And we'll see that. Feel free to take a moment and pause the video to read this, but basically what we're talking about here are the rules of engagement for how to handle net assets for FASB and how to handle net position in GASB, how they have to be classified for reporting. And essentially in private, you need 2 separations for net, and in public you need 4. All right, let's look at the chart of accounts for Harper, and you can see there you have different fund type under parent 1, and they have different character each one, and that's why they're separated out. We can have many funds under a fund type. And here, zoom this in, and you can see I have 7 characters for the primary balancing segment. That is the fund. And here you see them one by one listed. And there's multiple funds. And all of these could have multiple funds underneath, but they're all going to get grouped because of their character. Now let's talk about net assets or retained earnings in Oracle, and then the different. So we'll go over to the ledger, and I'm going to zoom this in so we can see this is the ledger for Harper. And then downstairs, you can see that's the retained earnings. They'll all go into that 31,101 at close if you did it on a standard close without a closing entry. And you'll see with 3101, when you do a closing, they all get dumped into that 31,101, but they all have different character: unrestricted, temporarily restricted, permanently restricted, etc., etc. So in order to comply with GASB or FASB reporting requirements, we have to find a way to reclassify this co-mingled amount into its proper character. And this is how we're going to do it through allocations that will reclassify these co-mingled amounts. All right, so let's close all this down so we can get back to the calculation manager to have a look at the definition of these allocations. So the first thing we'll notice is I have a rule set called all allocations, and underneath that I have 4 rules, 1 for each fund type. Let's take a look at the variable I defined, very standard for the period that you're going to input at runtime for the period that you want to run the allocation for. Now we'll look at the actual definition of each allocation. Now I want to state clearly here that the intention of this discussion is not to teach allocations. I got another video out there that you can watch on how to do that, but essentially the intention here is to show you how you can use allocations to do these critical reclassifications for something so important like in higher education. Now let's go over and look at these allocations, and I have 4 of them, 4 rules, and I've dragged over a point of view, and here you can see the variable that I described earlier for the period, and then some of the others that other aspects in the point of view that just don't change. And then we go over to the first allocation, which is going to transfer from 3101 to another account, which I think is 33,101 in this case. So there's no change in the point of view. And you can see I'm going to loop through the funds, and it's all going to go from 31,101. And again, the range is looping through the fund. And now the target is 33,101, moving it out of the 31,101, as you can see here. 33,101, move that over, unrestricted. So we're reclassing so it has the right character. Now the offset is interesting because in Oracle's infinite wisdom, they didn't allow looping for the offset. So we have to pick a specific fund and a specific account to do the offset, which means that we are going to have all these intercompanies, which is why we need the second allocation so that we don't end up with an intercompany, and the second one will just reverse out this amount that we're moving over to the offset. Okay, so we'll send it to the first one, and then you'll see this account, which is this sort of clearing that it says set to 0. Should always be 0 based on the outcome. Next is the excludes, so there's no excludes. And here we have the basis, and the basis has to do with the amounts for this run that are sitting in 3101 that we're moving out. And here we set this as default, continue, don't abort, and all that is good. And there we have the first one. Now let's go on to the second one. Now the second one simply takes that which we moved out into a single clearing account. The offset now has to come back and clear out the 3101 since we've already populated the account that we're moving to. So we're basically doing the exact same thing, same range. The target this time is 3101 because we're going to pull the amounts out. And then all of this will balance because we're going to clear out the clearing account once the second allocation runs inside of this rule. And that'll all come out once we take a look at it later on. Now, you are welcome, and I strongly encourage you to slow all of this down and take a look rule by rule what I'm doing. But in essence, these others are copies of Rule 101 with just changing the target and, of course, the type. So there's 1102, there's 1103, and there's 1104, and all of those have to go to different places, and the looping has to happen in each of those types. So take a look in detail, slow it down. I'm going to speed the process up for the sake of not making this boring, but YouTube allows you to slow all this down. So if you want to see it in detail, you can see how each and every one of these rules provides a looping through the specific type and then moves to a specific target and always leverages the same offset that goes into the offset temporarily within the rule, and then the second allocation pulls it out of the offset to take it back out of 3101 where it came from. So take a look at this. It's pretty straightforward, but you can slow it down and you can see what the heck is going on and what I did sort of show your work. Okay. All right. So we're all the way back to the beginning. You can see the rules, all the rules in the rule set. And I just want to go over to before I validate, I want to show you the variables. Okay. So let's go back up to the top here, the variables, and you can see I have merged them all. Otherwise you got to enter it 4 times. So you want to make sure you merge. I am going to validate and deploy. And once it's ready, we will go ahead and run it. It's not going to do anything, but we'll run it for the sake of running it. All right, let's go over here and run this thing and show you how it runs. I get that to click. I'm going to choose the rule set. That's all 4 rules are going to run. And notice once it pops up just one filler in on the variable, I'm doing it for July and I'm running it. And then we'll go over to the scheduled processes and we'll see them run. And then we'll go look at the log. And this log will basically tell you in detail that it ran 4 times for 4 different rules and there was nothing to process because we haven't done any closing entries. So there's nothing in 31-101 for it to move. But other than that, the only sort of error that occurred here is there's nothing for it to do. But I just wanted to demonstrate that it can run okay. You can slow this down. You can take a look at this log, but it basically shows you all the stuff that it's doing. And just to confirm, we'll look at the account balances and I'll show you there's nothing in 3101, which I'm sure nobody watching this video is going to be surprised. So I'll basically just pull this up and we'll go over and show 31-101, it's got nothing in it. And let me just show you that we have just the original journal inside for July. Let's go get some balances in 3101 by running the process, create income statement, closing. Now, normally you would run this into an adjusting period. All right, so I got to define the clearing account, which is basically and essentially the retained earnings account. It's one account. It will loop the balancing segments, but that's it. It won't loop anything else. Now, some people try to pull this off running through filters, which means you're going to filter each and every balancing segment. And if you've got a lot of funds, you're going to be at this all day long, which is why this method is such an elegant way to do it, because it saves so much time and it's so effective. And you would have to constantly be changing the closing account to try and target the character of each and every fund, which would be quite a bit of work. All right, so let's run it and we will get some movement into our 31-101. And we'll go to Manage Journals, go to July, and there is our income statement closing. And this reverses out all the revenues and all the expenses, all of the P&Ls, and it moves it over to 3101 by balancing segment. So it's always going to stay balanced, and we're going to have a lot of balances that are of different character in a single account called 31101. All right, so let's go ahead and post that, and then we will search it up to make sure that it gets posted, and it is. All right, now let's go over and check some balances for account 31101 by balancing segment. Let's put in July and we'll go for 3101, and looky there. They all closed out fund by fund, balancing segment by balancing segment into 31101. So what's the problem? Well, the problem is 3101 has a bunch of amounts with all different character, at least 4 different characters, and that is breaking rules of accounting. All right then, so let's go fix it. And we will fix it by using our handy dandy allocations. I'll choose the rule set. I'll choose the period July, even though we would do it to an adjusting. I won't post. Now let's go confirm the process is complete. And notice, once you see that journal's child, we're on our way. So let's go check out the journals, and notice there's 4 new journals, 1 for each fund type. Okay. And you'll notice the first one's been moved over, and we'll go into the second one, and you'll notice there's more lines here because there's 2 funds with the same character of temporary. And here you have another fund moved over, moved out of 3101 into the proper character. And last, we have capital assets moved to the proper account out of 31-101. Next up, now that we have them ready, let's go ahead and post all those so that we can check balances. Once they're posted, okay, good. We can go over now to check the balances. And so now we can go over and we can start taking a look at the balances from the allocation. And the first thing we'll look at is the 31-101. And notice it is all zeroed out, all of the funds. And there's 33-101. So let's change it to something else, 33-131. And let's change it to something else. And you'll see that each one of these, there's 21. And so all of these are now in the right character, because the account balances that relate to the specific title of the account now match. So we have reclassed perfectly. Notice there's 2 there for the temporary one because there's 2 funds and they both were moved over. And now I'm going to go over and I'm going to reverse everything out so that we have the original amounts back in the expense account. So I'm going to reverse back out the allocations. And once that's done, I will reverse out the closing entry so that we can take a different look at how this can be accomplished if you were just closing the books by opening the first period of the next fiscal year. So once that's all settled out, we'll go out and take a look at the balances. All right, let's go take a look at the balances, fill in all the details here for July, and look at that. We have all of the balances back. Perfect. So we can do a normal close. And you'll see here, there's your revenues. And then I will show for 6,000 that we have our costs back. Okay, so not closed out. So once we open the period for the next fiscal year, these balances will close out to retained earnings, which is standard. So I'm going to use the target of July of 26. That's the first period of the next fiscal year. And so this will take a minute to run. So now let's go take a look at some of the account balances. And the first thing we're going to look at is the adjusting period. And we will see that the costs, of course, are still there. And we can see that the revenue is still there. And all we'll do is change over to the next fiscal year of July 26, and boom, we are all zeroed out because it all closed out to 31,101. Again, all the wrong character, but that's the closing. So now, same game, we go run our handy dandy allocation set, put in the July 26, because that's where the balances are, and we run that, and then we will go find our journals for July of 26. Same thing, all 4, okay? And we'll just take a quick peek. Same game, this time just in July, and we will post them all, and then we'll make sure they're posted, and we'll go back again to look at the balances. Let's look for July of 26, fill in all the details, and we'll look for 31,101. Notice it's been zeroed out, and now we will look at all of them, and you'll see all of them have been moved over based on our allocation, and they're all in the right place. So we got that squared away. We have one more iteration of this process, which will more or less simulate how you really would run it. So I've got to reverse out the allocations and put everything back into 31,101. I'll get those posted. So the allocations have been put back into 31,101. Great. Let's go take a look at the balance and we'll prove out that they're back in 31,101. There it is. Now we're going to go run a income statement closing process standard, but we're going to run it into the adjusting period at the end of the year. I'll pick the first fund, I'll pick 3101, all into the same bucket, and all good, and we'll run that. Now let's go back over and find that journal. And there it is. Let's take a quick look at it. And it's your standard, move everything from P&L over to 3101. And we posted it. Let's make sure it's posted. Now back over to check balances. The details. And let's look at the 6,000s, all zeroed out. Then we'll look at the 31,101. And it's all there again, but again, the wrong character. So we will have to run our allocation one more time, but this time we're going to run our allocation. There it is. And we are going to run it in the adjusting period. Again, not posting. So we'll run that, and then we'll come back over to the adjusting period and query up our entries, and there they are. Let's take a quick look inside, and same game, right? So let's post all of those and then confirm that they're posted. All right, our last and final balance check. Let's go over to the adjusting and look, all zeroed out for 3101. And notice on all the threes, everything is in the right character, the right place. And if we go over to July, again, everything is in the right place. All is good. And you can see in July, there's no period activity for the 3000 account. Okay, lastly, we're going to take a look at this trial balance report, standard report that I ran for July of 26. It's the month after the year-end close. This is the state of situation where we had done the closing journal entry for P&L, and then we ran the allocations. So let's see exactly what happens and how beautiful this is. Now remember, the first two characters of this fund segment, it's a balancing segment, is the legal entity. So if you had more than one legal entity, you could have 21, 31, 41, etc. Generally, there's not that many in higher education, but there can be in big university systems that probably are not going to switch to Oracle. Big university systems like in California, New York, Texas. Okay, so that is the legal entity. So we have that covered for a balance sheet. We have 01, which is the fund type, the unrestricted type. Okay, and then after that, you could have as many as you like in terms of funds, up to 999 of them. Generally in an operating fund, as far as I understand it, there's probably one. There's more in others. So notice what's going on here. We have this original balance in cash. We accrued all the expenses, so there they are. And then the original entry of closing sent it to 31-101. Instead of us rerunning it several times, we ran it once. We sequestered all of the results into this 31-101. Then we reallocated them to the proper location through that allocation. Okay, and that's where they end up in this unrestricted net assets. The right character for this amount, so it's in the right account. 02 type is temporarily restricted, and it has two funds in this particular example for the sake of being able to show how two funds run. And here you see out of the original net assets holding that needs to be zeroed out because they were all co-mingled with different character. Now the character for temporarily restricted is sitting in this 33-101. And again, another 02. So you have your temp restricted fund 02, again, in the proper character account of net assets temporarily restricted. Okay. And now we have a different fund type, permanently restricted, 33-121, 1111, 121. The character has been taken out of here that was commingled and placed over here through the allocation. And we have a balance sheet potential here for the permanent restricted funds. There may be quite a few of those. Capital assets fund, same thing. Fund type 04 for capital assets. The first fund inside that type. And now we have 33-131. Again, the character moved out of 31-101 where it was commingled, and now it is in the proper place. And all of these can be grouped together through reporting in FRS and of course through SBase in Excel. So that is going to do it, folks. I hope you enjoyed it. If you did, you probably have socializing issues because this is really boring stuff, but it happens to be really important stuff to those who are responsible for finding a way to handle this when they're moving over to Oracle Fusion. I'll catch you in the next one. So that's going to do it for this one, folks. If you found the information useful, why not consider using the subscribe button like a bookmark so you can have easy access to the information without having to search for it when you need it. I really hope you enjoyed your visit today, and I will catch you in the next one.